It is Sunday, the weekend of April 21st, and welcome to the Trader Hub Weekly Market Review. Taking a look at the price action for the indexes last week, starting with the NQ, and man, what a wild week it was. What new developments do you see on the chart there?
Well, for this week on the NQ, it basically tanked all week. This is Monday, and Monday was a break of the level here. We actually had an arrow there that basically, not exactly, but very, very close to our idea played out, and brought it down. And all week we basically sold off. So it's actually quite the weekly candle here we've got on our hands. We broke the trend here on the daily. And so we're looking for downward movement here. We do kind of expect a retracement here to 17.7, and if that can hold, then potentially 18,000. But 18,000, if we don't see a gain above it and a hold, we are going to expect down. So, until we're up here, expect down, and that's where we've got all these arrows pointing out. So the most likely scenario looks like it could be down and a hold, and then a regain of the level we have here. It just doesn't look like it's ready to hold quite yet. Over the next few hours here, the market is open until the morning. That'll definitely tell us a little bit more about what is going to happen at this level. So, like I said, we could see it come back up to 17.7, or we could see it fail to hold this level and continue down. What do you think here on the?
I pretty much completely agree with your analysis. I think the key sort of takeaway here, in my opinion, is that any of these levels that we've failed and tested through, any retracements to the upside here would be potential areas where we could see them fail and continue downward. That only changes after we gain above kind of what you're saying, 18,000. Then we were starting to potentially look at having regained the uptrend. But until we regain this area, it looks like further down. Any of these potential, moving back up arrows or projections we've drawn are on to areas where we think price may be likely to take the next leg down, unless we regain 18,000. So we've, like you said, the daily definitively lost the trend. When we lost 18,070, that created our lower low, and we were looking maybe potentially that could be a new low and then a regain above to continue the uptrend. However, when we lost this and continued dumping now, confirmation to the downside. So I think that it's actually, even if we regain up to 18,000, if we do not close above and hold and continue higher, this is going to be another opportunity to take a really good short for another lower low on the daily. And I think that these two lines that we have drawn, these are projections to where we think would probably potentially be some of the juicier potential reversal points. If we just take a look at this candle from the high to this level, that's 10%. That's a huge correction. But that isn't to say that it could have to stop there. Probably get some consolidation, but the juiciest level on the chart is probably down here. So 15,150, or around somewhere in that box. That is the origin that sent us up on this whole leg. So we could retest the origin, no problem, on the weekly chart, and that would be another 7% on top of the 10% if we make it down to 16.5. Both are completely valid plays. People are going to be freaking out talking about a stock market crash if we go down here, but these are good levels to start potentially looking at longs. I'm not saying that we will be taking longs at these levels. We'll start to look to see if price does what it needs to potentially reverse at those levels and look for those trades. But if you manage to catch some shorts up here, definitely you should have taken some profit by now. Doesn't mean you sold all of it. We could certainly see lower. But until we regain 18,000, we're looking at some of these lower levels. Do you have anything else to add? Because I think that kind of explains all of it.
I'm just looking at this and thinking about, like, what are people going to be saying, no problem. If we make it up here, the whole world, the Jim Cramers of the world, if you will, are going to be telling you, everything is a-okay. Go ahead and buy, even though we're not.
It was a fake crash.
Right. And then if we come down here, the world's going to be ending.
Yeah, World War III
So-
sparks
so
the crash
just-
of the next crash. Yeah, that's what it's going to be.
Yeah, absolutely. So just be ready for the gain or the regain, the invalidation in the other direction, and that's all I've got to say.
Yeah. Cool. So do you think the S&P looks any different, or is it kind of more the same?
It's pretty similar. It does look like they've got it on a pretty serious downtrend here. I think that, I mean, you can see the selling here all week. This is Monday. That's the big level that broke and continued down. Just to take a quick look here at the weekly, you can see this well-identified consolidation level that they tried to hold that didn't hold and continued down. So we're really looking for down here at 4,800 and even lower. But even that look, like you talked about before we started recording, is a great higher low look on the overall picture of the S&P. Locally, it won't be looking very great, but overall, we haven't broken any massive levels, and that would be a great cool-off period before we can see a retracement higher. What do you think about
Yeah, I
the
think
S&P?
that we're finally getting to the point where we have enough of a pullback that we can start kind of testing these major levels again, which would offer, if they're major levels like that, that means they're also going to be the most significant areas of potential support or resistance when we're talking about these big levels. So, even though we could certainly see lower, like we were talking about even on the NQ chart, it doesn't mean that we're going to disregard these levels. That we really, really want to pay attention to the higher time frame levels. The weekly levels are super juicy and are going to offer some really great risk to reward. Because, if we end up hitting this level down here, and, we do what we need to do to kind of try to regain, even if we don't go all the way back up, this right here, if we get even maybe one or two of the levels back, that's a juicy trade. I mean, what is that, like 4%, maybe a little bit more, 4.5%. That's a totally valid long, even though we're still, unless we regain 5,200 in my opinion, we'll call that 51.95. We're still looking for shorts. Like, that's the level that failed to send us on the downtrend. We need to regain that level before we are potentially making a new all-time high. But that doesn't mean that we disregard any potential longs at these areas. We still have to react to what price tells us, even on the lower time frames. Just be cognizant of the greater trend, because any levels on the way up could fail and send us further down. That's kind of what I see on the chart. So this could play out, or we could continue to go lower. We just have to kind of look for those confirmations or invalidations. Looks mostly the same as the NQ chart. Could probably pop up from here a little bit, or we could just find resistance somewhere else and pop us down. Not really anything else to say. You have anything to add before we move on?
Nope, that's good.
Cool. This one isn't like a perfectly thought out area, just an example, so we'll remove that one for now. Let's go on to the small caps. We kind of had talked about the week before being like, hey, we really need to hold 2043, or regain 2043. We did not quite get that opportunity. We never quite made it all the way back up here, and then we just had a continued sell-off and just kind of dumped down. Now, if you were really honing in on the lower time frame, you could have potentially taken this short, but if you were waiting for this 2043 level, like we'd said, that was the juiciest level on the chart, it never quite made it there, so they just kind of went without that. Now, I think in the short term, kind of looking at this chart, I think that we have the possibility of attempting to regain up here again, or at least 2020. But until we regain 2043, we're still looking for shorts. Like the trend again here is also broken to the downside. So I wouldn't be surprised to see kind of a retest of, if you want to call that the failure that sent us down. We could see that retest and fail for a lower low down here at this 1865. That's the 0.618 fib of the failure to failure that we've drawn from back here. So that is a totally valid price target, and if you think it can't go down there, it absolutely can. If we do end up gaining this area and holding, then we have the ability to potentially retest the highs up here. But until we regain 2040, there's no reason to believe that we're moving back to the highs. So those levels are unchanged. They're, instead of now looking for longs, we're kind of looking for shorts, right? So the levels are the same. Our perspective on where the trades will be targeting have changed. What do you think?
I believe I see the same thing on the longer time frame, I do think though that locally we have a really good trend starting here. We've got this stair stepping that you can see. And if it continues, I think it has the potential to make it to 2043, like you were talking about. And I do agree that is the level you see here. 2043 is the level they came down to on this leg, tested, and then regained and held before producing the big leg up that, not all-time high again, but that's the high of the leg. And so that's why it's the important zone we're looking at and want to see this bounce from. And until we see price above that zone, we're not looking for higher time frame longs. We're expecting downward movement until we see that. So yeah, there's still opportunities here on the lower time frame, but heavy profit taking should be taken in at 2040 if it gets there and you're long from this zone.
Right, yeah, my analysis about potentially seeing these areas retested and then further down is just based on the higher time frame. Like, we've now entered into a downtrend on the higher time frames. That doesn't mean that lower time frames, as you pointed out, do not offer counter trend moves. That happens all the time, and we should be looking for those. This is a great example of kind of what we were talking about we might be looking for on the other charts. We hit a level and we have to see what price does, and now we see that it is attempting to regain. So longs are valid on the 1 hour time frame on RTY, even though we still expect downward until 2040 is regained. We still, on the 1 hour, are able to take longs because we can see that price is respecting this level at 1940. Right? It is gaining again at 1940. It went below, moved back up, regained, made a higher high, higher low, and now we're continuing up. So that is, you have to pay attention to all the time frames. If you want the best fills, you have to pay attention to all the time frames. But the larger trend is certainly still down and will be until we regain 2040.
Right.
Let's go ahead and move on to gold. Gold, it's had a huge move very recently, and we're kind of still getting this upward grind. But the move, we got this parabolic move. We're starting to kind of curve over a little bit. What we're going to see probably is a fight over these two ranges here. So 2410-ish, that kind of like area, and then 2390 to 2380. Kind of somewhere in this range are the areas where we want to see price hold to continue to move higher. This level right here at the 2410, we need to break above, hold it, and then move higher if we're going to actually make a new all-time high. Or if we're going to fail and move lower, we need to lose 2380 to 2390. Somewhere in that range needs to fail, get retested, and then move lower. I will say that even though this is we haven't lost anything on gold yet, except maybe super locally, which we'll talk about later if we want. But all of the risk is to the downside right now. This has been a huge move. And so the best risk to reward is certainly going to be some kind of retracement down to 2200-ish. That would, again, on the higher time frame, not be a bearish look. It would just be a retracement. If we can come down here, gain, retest, and continue to move higher to all-time highs, that's a great risk to reward long. The only reason that we would expect a failure of this uptrend would be if we came down here, failed, retested, and then continued down. So kind of the long story short of everything I'm explaining here is that until one of these two levels breaks and kind of proves to us that we're going to go in a different direction, we're just going to consolidate sideways, potentially move up, potentially move down. If we break up or above, we'll have to see. We don't have enough actual information in the price right now to tell us what's going to happen. But if we do lose these levels, these are the kind of moves we expect. What do you think?
Yeah, I see the same thing. I think that we've got these three levels here, these three major levels. And if we can hold this one, we'll go up. If not, we'll come down. What I like to look at here a lot is, and it kind of popped out at me, is you can kind of see right here how there's all. That's a bad example. Sorry about that.
You're all right.
I'm doing this live. There's this zone here where you can see there's a lot of stop losses that have been built up here, and they just took those out, and replaced all the trades, all the positions that stopped here were forced to buy at the top, and then those positions were replaced with what we call the big boys, and now they're in charge here, sending price down. And they're targeting, you can see it already, they're targeting this area to get all these stop losses that are down here. So what I expect to see is price come down to get these stop losses, because this is where the big boys in charge of the direction with the information to know how price moves, they're trying to push price down here to make these people lose money so that they can take their positions and send it back up. So if that is correct, that hypothesis that tonight will kind of drift down, there's a possibility we could regain in the morning and continue upward. It really looks good to me when you take into account that they kind of slurped the stop losses here on the short side on Thursday evening, and then they've been using that fuel to get the entries they want to the downside. And you can see they already did kind of slurp some stop losses there. I think they're not done, and they'd like larger long positions. That's what I see. What do you think about that?
I think that that's absolutely correct. I think that, if I can pull my path tool here, they got a bunch of shorts filled up here when they stopped everyone out, forced all those buys that they shorted into, which is the perfect situation for them, right? And then this is them defending those positions.
Absolutely.
And so we could easily see this come down into this range. That doesn't mean that price can't, continue up, but I'm with you on that we'll probably end up seeing the lower range tested first. And I would not be surprised to see them try to shove it down, because they want, like, if you have your longs here, where are your stops, right? They're in this range. So if they can get these stop losses too, they're slurping up more liquidity. And then, truth be told, they can do whatever they want. They can send it up or down. But then they'll have control of the actual liquidity at these ranges and take out all the orders, and they'll be able to push price wherever they want. This is kind of more of an advanced concept of, like, where are the institutions that we want to trade alongside? What are they thinking? How do they trade? This is kind of what they do. They push price around with enough of their own liquidity to get your trades to fill their orders, right? If your stop losses liquidate into their positions being filled, they have a greater amount of control over that price range. And then if you want to get back in again, you got to put more of your capital up for trade, which they like. They want more of your they want your capital. But that's why we look at these things, right? We want to know what are they looking for so that we can look for the same things. And that's why we say we don't really know for sure, like, what's going to happen in these ranges. We just think the fact that we couldn't push past this area just now means that we'll probably end up testing the lower area. They'll slurp up some more stop losses there, push it lower. And then it'll probably either regain the range, like it'll just slurp down and come back up, keep going, or they'll continue to push it down and fill for more down here. So that's another reason why we say take the retest, not the impulse. You can't really... If you just thought this was the level to gain, which it was, and you took this long on the way up, you just got destroyed. They slammed it down on you. They got your like, where would you place your stop right there? You probably put it on the level to gain, and then you just instantly got stopped out, so they got your liquidity. That's why we want to wait for confirmation. We never ever want to take the impulse. So I guess that was kind of a long-winded way of also saying we need to see what happens, but we also kind of have an idea of where to look, because we understand now that this has been taken out, we can see the other side potentially is like all these stop losses from here need to be slurped down here. We haven't had these longs, their stop losses haven't been slurped since, way back there. So we can try again. And I wouldn't be surprised to see if this ends up happening, it could do one of these and just blast through, because then they've gotten all the liquidity they want. Or it could go down, but we don't know. We have to see what happens. That's the thing, is we can only speak to probabilities. We can't see the future.
I really like that, what you just drew there, because this is the first big one. This is their second position, bringing it up to here. They got a bunch of stop losses built up, and then they slurped them here. And then I think they're coming back down to here in this zone.
And I would not be
But
shocked.
that's
We
exactly
see that
what we
constantly on the chart. And I
Right.
guarantee we can go back and find stuff like that. So, I mean, you're going to see these big slurping moves before we get the big move. And then and that's the thing is, usually when you see a big grab like that, you're not going to you might not even get a huge retest. You're going to have to look, when you see a huge liquidity grab like that, this is obviously, I'm trying to use a further back example, but this is actually a great example. You can't, there's no retest because they slurped so much liquidity. Like, look how far down they went. You're not going to get a retest on that. You have to use the lower time frames, the minute time frames, to see the retest on the lower time frame, because you'll see it there earlier. You won't even get a chance to see that on the 4 hour twice. So you got to really, really pay attention to the levels, see them, and be looking at them when they're happening.
Absolutely. I saw something I wanted to highlight here. You see how we've got this zone here of, that's sideways for a good month there? Or no, that's several months.
That's about 2 months.
December to March.
Oh no, it's even more. You're right, that's 4 months.
So we've got this, this low, and that's what they put in a low, and that's when they make the move up. And then they put in another low, and that's when they make so it's after the lows, not you don't want to breakout buy. That's what I'm trying to get at. You want to buy when people are capitulating, because that's when price reverses direction.
Right.
Well, anyway,
let's just get rid of these, not because they're invalid, but because we want to have a cleaner chart. You're good. No, I mean, I'm glad that we talked about that. That's something that people don't think about, is like kind of where the institutions trade on the chart and kind of how they get their orders, because they're too big to just market in. They can't do that. Yeah. If they did that, they would blast the market and get horrible fills. So they have to get creative. We talk a lot about that in our Discord. Let's go ahead and look at the Dow. Do you see anything different? I kind of see a little bit of a correlation here to the RTY. I'm not trying to say they are correlated,
absolutely.
But this is kind of a new low, regain, and hold and kind of go. Look, I think we could start seeing some retracements up here. What do you think?
Yeah, exactly. People come into Discord talking about, what should I buy, and they're always wondering. And this is what we talk about. This is the reversal. We're talking about the regain that we're looking for. The problem is you can't see the future. You don't know if it's going to come down here and do this, or if it's just going to continue down and do this. So this is where you want to be, and not necessarily here exactly, but this is the idea where we want to re-enter on the retracement in expectation of further highs. And you can see how, just because we expect it to come down, we don't just put an order here and wait for it to get filled. We wait for price to come down and then do the same thing we see right here, where it's gaining up above the previous area here that was trying to hold. So this is the area it was trying to hold. We're now up above it. You'll see this on even smaller time frames below a 1 hour. And so what we want to see is price come down and do the same thing. Do this exact same pattern on the lower end there. And if you're patient and you wait for the right moment, you get a great fill and price goes in your direction. What do you see about that on the lower time frame?
First of all, I just think that that's the perfect level. I mean, a lot of people think, well, if you're targeting the next level up here, say, then, this is, I don't want to miss that. It's like, well, I get that, but you're opening yourself up to this whole drawdown, all of this drawdown, and, what if you think, well, okay, I'm willing to endure this drawdown to get up there, but what if this one plays out? You're up here, and this happens to you. You don't. That's right. You need to take your trades on retest because they offer the best structure to your trade, right? So if this ends up playing out to the upside, we come down here, we see that it kind of holds and comes back for a retest. I can then take my long there and put my stop where that idea is invalidated, which is maybe even just down a little bit, maybe 150 points down, and then I'm able to take that trade for a higher high, which is at minimum what is that? 600 points. So I'm risking 150 points for 600 points. That's a good ass trade, and it can keep going. It can go higher. So now because I've been patient enough to wait for the correct trade opportunity. I've been rewarded with a better trade. Like the setup is better, and I don't endure any drawdown because I was impatient. Right? I don't want to have to. If I take this and my, you'd be like, well, I just set my stop down there, but it's like a 1-to-1 trade. Nobody wants to take that. So not only do I think you've identified the correct level to enter on the trade, I think that you if you're going to make it as a trader, you have to trade like this. You can't just break out long everything that you see. And the worst part is sometimes that'll work, and then you think that works, and I do, and I'm just going to keep doing that. And then you get screwed. Like, it only takes one of these to just destroy your account. So don't do that. Speaking of which, on the higher time frames about the idea itself, I completely agree. I think this is very much the same as the NQ and the ES. We've lost so much that we really need to kind of regain up here, 39,100, or even like the failure that sent us down from that area that we were looking at. 39,300. Until we regain either of those areas, it's still looking like shorts. But as you just identified, that doesn't mean we can't take longs, potential reversals, right? We just take the trades that look good on the chart. We don't make a judgment call about what we think the market might do, because we can't know. We just have to take the correct trade setups. So right now, if we can come down and hold, we can take a retest for a long. If we fail again, we can take a short on a retest for a lower. That's what I see. You see anything different?
Yeah. Well, I just wanted to point out this super local example of why we talk about buying the retracement instead of just breakout buying or whatnot.
Go ahead.
You see right here, we have this low that was put in, and price came back up and then came back down to it's very narrow though. You could call that a double bottom, or it's probably a point above. So it's a higher low, very technically, but it didn't ultimately matter right here. And so if you were a breakout buyer, you'd see this equal low or higher low, and then you'd see it up here, and you might be tempted to buy this right here. But what happened is it came right back down. So this is still knife catching up here. If you'd have bought this, that would have given you an opportunity here for a good little bounce, and you would have been able to take a profit target and then get stopped out in profit before this huge swing down came. So that's why we don't buy the tops here. We wait to buy the retracement, and then just in hopes of higher. Not to say that I'm on the hopium, just you don't know what the market's going to do, and you can't catch knives. This is why we wait for these holds right here to go long instead of here, because it can just keep going. Anyway, that's enough.
What do you think the market's going to do tomorrow? That's my favorite question, right?
Right,
we can't
absolutely.
know, but all we can do is analyze the technicals and take the best trades, and be patient enough if we get missed to just wait for the next opportunity.
Absolutely.
So if it doesn't play out exactly like this, then we just wait and go next. We get paid to wait as traders. And I will go as far as to say, if you don't trade like this, the way we just described, you will probably not make it as a trader. You're going to give too much up back to the market. Anyway, let's go ahead and move on to the oil. CL1 did a lot of losing, but pretty volatile week, right? Like Thursday it opened and just ripped up like 4 points. But importantly, wasn't able to regain the level that needed to regain, and so we're actually on our way back down now. I think on the higher time frame, nothing has really changed, but I do think that we don't want to see this lose 80.5. 80.5 is the major consolidation that we tried to gain for a while. We finally closed above, held it, and sent us up. If we start to see this fail and move lower, it will still look good on the weekly chart, but we're starting to talk about also losing the uptrend on oil at that point, right? Just technically, right? We'll have lost the level to hold. That is a failure, but that is now the next level to hold, essentially. And then we'll be starting to talk about looking to the downside. With that said, I am still pretty confident, just based on the technicals alone, having put in a higher high, and this is a higher low, that even if that occurs, we could see this end up putting in another higher low at some point. The longer time frame trends look good for higher. However, the current short-term time frames look like we may see lower unless we can regain and break above 85.75 again. In addition to that, we want to break above 85.75 and we don't want to see 80.5 lost. We could range in between there for any amount of time, who knows, but those are kind of my initial thoughts. Is it'll look bearish if we can break below 80.50. If we can get above 85.75, we can start to talk about retaking the next high on this move. What do you think?
Yeah, I mean, we've been saying it all year. I think oil is good for up. That doesn't mean it won't come down first. I think it'll come down and kind of do a little slurp and then start regaining in the morning. You can see that actually here this afternoon, it did gap down just so slightly, which is pretty interesting with events in the Middle East. That the oil gapping down doesn't. My point is, fundamentals don't really play out the way you necessarily expect them to. So that's why price is more important to focus on, or actually be the only thing you pay attention to, because it really looks like it's just a slurp here. They're trying to fill some large positions down here at 81, 82, and they're trying to make it look as ugly as possible before they do that. But as you can tell, our idea here has played out exactly, except that they went lower and higher than what we were looking at. So they were thirstier for positions, is really all that means to me. We still had the right idea, and we're still on the same direction, in my opinion.
Yeah, I think that the only thing to kind of take away here is that the volatility caused the moves to be much greater than the TA initially looked like. Not that the levels are wrong, it's just that it blew through certain levels just because of the amount of volatility and touched different ones, further ones, right? So the levels still matter, but on great volatility events, you can see moves like this happen. You know, you just have to be prepared for that. And that's again why you trade with stop losses, in case we're in any positions and get some kind of freak volatile moves, like going up 4 points in like no time. That's important to have. And also why, if you had a long here and you had a TP up here, you didn't want to just be like, well, I'll set an alert and I'll take profit when it gets there. Like, you want to have your shit there, like that. You want that there, because you just got filled. And now technically you could, if price does what we want, you could get another chance to take the same trade.
I just realized this is 12 hours of trading overnight too. That they pumped it $3.50 and then right back down in 12 hours.
It was almost 4.
That's just nuts.
Yeah.
Anyway.
No, I mean, it's good to kind of discuss kind of how the market reacts in these volatile events. I actually think, given everything going on, I'm not a fundamentals guy, but I do know that certain fundamental events create volatility that we as technical traders like. This could be quite a volatile month or two going forward with everything going on. It could get some pretty huge moves. Anyways, let's go ahead and talk about the dollar. The dollar has had, other than the big move, right, that we had talked about the week before, we've kind of been consolidating at the highs here. To me, that actually makes me think that it's definitely going to move higher. You would expect after such a big move that we would get a retracement, and I'm not saying that we won't get a retracement. A move like this is absolutely possible, but I would still think we'll probably end up holding and moving higher if that happens. But more locally, this looks like sideways consolidation for another move up to me. I believe that we are definitely going to see 109 in the next... I'm not going to make a definitive time frame here, but in the next year or two, I think that we're definitely going to see the dollar continue to rise. And especially on the higher time frame, that just seems to be confirmed. We keep putting in higher highs and higher lows on the chart, especially compared to previous ones, higher high, higher low. and we're in the process of attempting to make a new high. So there's nothing lost about the uptrend. If anything, we're about to potentially regain above the level that we need to confirm higher even further on the higher time frames. But locally on the daily, it looks like it's just going to consolidate for a while, potentially pull back. But unless we lose probably around here, 104.5, 104.6, I don't see the uptrend being lost. I think we're just going to continue to grind higher on the dollar. What do you think?
I love the dollar right here where it is. I think it's the perfect long to smash a market in right where it is. Not financial advice. So what I'm looking at is this area right here. That did not go in where I wanted it to.
I think I know where you're looking.
About right there. So I'm looking at this wick, which is where we came down to and held to produce the high up here. And then I'm looking at this wick, which is the last spot it came down to try to hold that swing right here, the low of this swing. It didn't hold that, and it went down and confirmed the short, which occurred right here. So the fact that we're up above that is really bullish in my opinion. I'd be looking to buy this box here, which is a fairly wide box and all things considered, but it is this exact weekly level, this whole zone we've identified. This is that bounce we're looking for. Now this is the top of the range, the swing there, but it's still a perfectly valid opportunity to long if price comes down a little bit here. I'd love to long 106 on the Dixie right here. 105.8, anywhere in there looks really good for longs for up. In my opinion, this movement is still valid. We tested the upside of the swing here, and I still believe that they could come down and then continue up. That's what I see locally. I believe that next week it'll close higher. That's my prediction. That's not
getting into predictions
crazy.
Now. I like it.
Well,
I'm just messing with you. I mean, I'm similarly bullish on the dollar with you. There doesn't really seem to be any indication that we're in immediate danger of losing anything, and consolidation at the highs here looks good. Just looking at the lower time frame, I wouldn't be surprised if we could see a slurp kind of at the low of the box and then a regain and go. But I don't, when I was talking about we could potentially see lower, that's a possibility, but I also don't expect that. I think that we're probably going to end up holding here and moving higher. One of the reasons that I think that is kind of piggybacking off of what you said, the box, but also just looking at the candles here. We have a lot of wicks attempting to hold this area, closing in the box, failing to close, and then coming below. But super locally, I really like this right here. If this line was the level to gain and the level to hold, right, to continue moving higher after failing, like if you want to see like a potential slurp, retest, and go, that was the level to hold, and that is what failed. Absolutely. And that retest right there, anywhere in there, that's what sent us down. So now that we are in the same range, I think that is also it's the level to hold again. And I think that if we come back down there one more time, that's a great long, and that could be enough of a hold to blast off, because we've already started holding here. I think you could, if you get back the opportunity to get a 105.8 entry, I think that's a good long for sure, and it just confirms our thesis on potentially moving higher, because consolidating back up above that range is very bullish to me.
Yeah, absolutely. I feel the same way.
All right, let's talk lastly about the banks. Very interesting that everything has had a horrible week, except the banks ended up regaining. How funny is that? We talked about, if we wanted to see lower, we'd probably see a failure here. We are starting, not calling for this yet, until we regain 48, in my opinion. We could still see lower. However, we are starting to see a potential regain of this range. If we can test 48, and either close above and hold a move higher, or retest after testing 48, coming back to 47 and also holding there. We can attempt to move back up to 50.5 again. We'll probably retest the box first for sure. So call it 49, somewhere in the 49s there. But I see this is potentially, this regain here on Friday is the first attempt to potentially come back up to the highs. Now, I also want to say that I think all the downside risk looks more to the downside now. We've definitively made a lower low, and we've got more to gain to regain the uptrend. But it is technically possible that we could attempt to regain here. However, I think we're going to see this box. What do you think?
Yeah, I think there's a really good chance we see that box as well. I did want to go on the lower time frame and kind of depict what that would look like my opinion is on this overall is either we're going to see this take place, it's going to come up, and we're going to hold a higher low and go up above, basically back to 50.5, or we're going to come back to the box and then potentially try to test the same level again here at 47. So I wanted to show how that would look, kind of like that. I'm getting a little carried away here. So on the 4 hour, that's a little bit more of what you would expect to see if it's going to go to the box. If it's not going to go to the box because it's going to hold, we're going to see it come up above and then hold this $47 zone and produce a higher low that continues up. For me, it really looks like, it hasn't quite gained up above these wicks, which is what we want to see. We want to see it up in, let's see. Oops. For it to gain, we really want to see it up above here, which is why we have this high up above, and then we want to see it come down and gain there. So those are the areas we're looking at. Gain up here and then long here, or wait for it to come down and short that same spot for lower.
Yeah, I completely agree with your analysis. I will say that if we don't, I think this is in a pretty precarious spot. I don't think if we close below this level again and come up for a retest, I think if we're going to see that lower box, it's going to be a dump. Like, it's going to just absolutely rip downward, because we're kind of at one of the major levels to gain and hold. I think this is the last. This really tried, and now we're below it. So if we lose this again, I would say we're probably gonna dump. And I would expect any attempts to regain up here to be pretty hard fought. I think it's going to be corrective price action up here. It doesn't mean this is, invalid. I just think that given the nature of the price on the chart right now, I mean, you can see these big moves. I mean, there are big moves in both directions, but clearly the higher time frame trend is now down. It's going to take a lot to kind of get over that, and we've got to go all the way back to 50. So I think that any attempts to regain these ranges are going to be difficult and long, and I think it'll be very easy to just send it down. That's just kind of what it looks like on the chart to me.
Yeah, absolutely.
Cool. I don't really have anything else to say about anything on the charts or the banks, unless you have anything to end with.
No, I think we covered it.
I think we got it all done. Anyways, thanks again for tuning into the Trader Hub Weekly Market Review. If you like this kind of content, sub to the Hub and consider joining our Trader Hub Discord community server. You can find it using our link in the description. See you next week.
Till next time.